All right. What is up, guys? What's going on? We are live with another XRP After Dark. We will be getting into this week's news about XRP and Ripple. Get into it. We're going to starting out with the recent escrow and supply. What's the latest on Ripple's monthly escrow unlock? Did they relock most of it again?
Billion XRP on July 1st, right on schedule. They split it across 3 transactions worth about $1.04 billion at the time. And yes, they relocked most of it again. Looks like around 700 million XRP went straight back into new escrow contracts. That's been their pattern for a while now. So the net addition to circulating supply is usually just 200 to 400 million XRP a month. Right now, there's still roughly 38 billion XRP locked up in escrow, which at this pace could take about another 9 years to fully work through. It's all pretty predictable at this point. Market barely blinks anymore. Want me to dig into how much they actually sold or anything else?
Yes, I want to know how much they sold.
Sales anymore. Ripple stopped publishing detailed quarterly XRP markets reports after Q1 2025, so we no longer get precise figures on how much they sold from the unlocked batch. From the pattern, they typically relock 600 to 800 million of the 1 billion unlocked each month. That leaves roughly 200 to 400 million that stays out for operations, liquidity, or sales, mostly tied to their on-demand liquidity business. The July unlock followed the same script. 1 billion out, about 700 million right back into new escrow. Without the old reports, we can't pinpoint the exact sold amount, but it's in that lower range and hasn't been moving the market much. Want me to check on-chain flows or something more specific?
Okay, so they sold less than 300 million and they may have kept some for liquidity.
For the July unlock, Ripple released 1 billion XRP, but relocked 700 million right back into escrow. That left around 300 million net added to circulation. They don't break it down publicly anymore, so we don't know exactly how much was sold versus held for liquidity or ODL. But that 300 million chunk typically covers their operational needs, sales, and keeping the ecosystem liquid. It's the same range we've seen all year.
All right, sounds good. If, say, next month liquidity on exchanges is low, like uh, all the XRP got bought up off of exchanges, and when they did the unlock, would they use it for helping exchanges with more liquidity or what?
All the available XRP got bought up, Ripple could absolutely use some of that net unlocked portion, like the 300 million they released this month, to send tokens directly to exchanges or market makers. Their original plan for the escrow was to use the XRP to incentivize market makers who keep spreads tight and to sell to institutions. Providing liquidity to exchanges when needed fits right into that. They don't want thin order books messing up their on demand liquidity business either. It's one of the reasons they keep the net release flexible instead of dumping everything.
Okay, sounds good. But in the event of, say, no XRP being left on exchanges, and it's the middle of July, let's say, what can they do? Escrows are locked and they don't release until the first of each month, right?
They can't pull more from escrow each month. That's by design. No early releases possible. In that situation, Ripple would tap into the XRP they already have outside escrow. They've got billions in operational wallets separate from the locked stuff, which they use for liquidity, market making, and ODL. Those holdings would cover helping exchanges in the short term until the next unlock.
That's interesting to know. Okay. With another billion XRP just unlocked, is the market shrugging it off as usual?
Yeah, the market's pretty 300 million net into circulation, roughly 320 million bucks worth. XRP's holding steady right around $1.05 to $1.06, actually ticking up a bit today after holding support. Everyone knows the schedule by now, so it barely registers unless the broader market's already freaking out. The unlock didn't cause any real dump.
Okay, let's see. Let's talk about ETF action. ETFs saw their first outflows in weeks. What does that tell us?
It doesn't, that's normal. Even strong funds have red days. The bigger picture is still positive. They've pulled in over a billion cumulatively, hold nearly a billion XRP, and June was still net positive overall. Bitcoin's been bleeding way harder, so XRP's holding up relatively well. It's more noise than a signal right now.
Okay. Why aren't these big ETF inflows actually pushing the XRP price higher?
A couple big reasons. First, XRP's huge small against the overall market cap. Second, a lot of that ETF money comes from people moving existing XRP into the funds, not brand new buying that hits the open market hard. ETFs also often buy through OTC deals off exchange, so it doesn't push spot prices up immediately. Plus, the broader crypto market's been dragging everything down lately. It's building structural demand underneath, but not enough yet to break the current range around a buck 5.
All right. Yeah, I'm pleased that it can't seem to go below $1, and I'm happy to see that. Which ETF is leading the flows right now, Bitwise or Grayscale?
Bitwise is leading by a mile. It's sitting on about $300 million in assets with nearly 287 million, 58 to 59 million, with 55 million XRP. In the most recent weekly flows, Bitwise pulled in another 5.5 million XRP, and Grayscale actually saw a tiny outflow. Bitwise has been the consistent leader in both size and inflows pretty much since launch.
All right. Price and market vibe. XRP sitting around a buck oh five. What's the short-term price prediction for July?
Most analysts see XRP staying right around here for July, probably trading between a buck and $1.15 or so. It's been coming in every month. There's no big catalyst pushing it much higher short term. Support looks solid around a dollar, like you mentioned, but it's struggling to break above $1.10 to $1.12 resistance. Unless Bitcoin rips or we get some fresh news, July's likely to stay range bound.
Okay, unless Clarity Act passes, right?
Exactly. If the Clarity Act actually passes and gets signed, that's the one thing that could genuinely break XRP out of this range, an agency opinion, which would unlock a lot more institutional money, especially from banks and conservative funds that are still sitting on the sidelines. Analysts have floated targets like $2 to $4 or higher in the months after passage, depending on how much new ETF money flows in. Right now, though, the bill's still stuck in the Senate with tight timing before the August recess, so the market's not pricing in a sure thing.
Is XRP overdue for a rally after being down over 40% in the past year?
So this is more of a normal cool down than some injustice the market has to correct. The huge supply, ongoing monthly unlocks, and broader market weakness are all weighing on it. Sentiment is pretty washed out though, and it's holding $1 in support stubbornly. That sets up the possibility of a bounce, especially if the Clarity Act gets real momentum. But no, it's not guaranteed to rip higher just because it's been beaten up.
Okay, let's see here. Whales are still buying while open interest hits lows, bullish or just positioning?
It's more bullish positioning than just random moves. Whales have been aggressively buying, adding about 1.53 billion XRP over the past 6. Retail's been selling into the fear, and open interest has crashed from over $1 billion down to under 150 billion, basically flushing out all the leveraged traders. This combo, whales accumulating while leverage gets wiped out, is the classic setup for a potential squeeze or rally. It shows real conviction from the big money at these levels. The only missing piece right now is a clear catalyst, like progress on the Clarity Act.
All right, let's talk RLUSD and stablecoins. RLUSD crossed major market cap milestones. Is the stablecoin stealing the spotlight from XRP? I don't like this question.
It's actually helping XRP, not stealing the spotlight. RLUSD just passed $700 million in market cap and is growing fast. Every time someone uses RLUSD on chain, on demand liquidity, it creates real utility demand for XRP to bridge those payments. So the more successful
Okay, continue.
RLUSDs sitting around 1.5 to 1.7 billion dollars in market cap right now. It's stablecoin since launch are asking the same thing. The truth is mixed. RLUSD brings more activity to the XRP ledger, which burns a tiny bit of XRP in fees on every transaction. But most big Ripple deals are settling in RLUSD instead of using XRP as the bridge asset. So far, that growth hasn't translated into strong buying pressure on XRP itself. It's helping Ripple the company more than XRP holders at the moment.
It's weird how you said that RLUSD passed a $700 million market cap, and then you went and said it's sitting around 1.5 to $1.7 billion market cap right now.
Yeah, you're right. That was sloppy on my part. I mixed up the timeline. RLUSD crossed the $700 million milestone back in mid 2025, sitting around $1.58 billion right now. My bad on jumping the numbers like that.
How's RLUSD doing in Japan and Europe after those recent launches?
It's still very early. RLUSD just launched in Japan about a week ago through their partner SBI VC Trade, so there's no meaningful adoption data yet. It's now available MiCA CASP license in Luxembourg at the end of June, which opens the door across the EU, but they haven't fully rolled it out yet. The stablecoin's holding steady around $1.57 to $1.7 billion in market cap overall. We'll need a few more months to see if it actually gains traction in either market.
Okay, I'm sure it will. Pretty confident. Let's go into tokenization and XRPL. The XRPL just exploded with tokenized real world assets. What's driving all that growth?
A few things are driving the explosion on XRPL. The network now has about $3.96 billion in total tokenized RWA value, roughly 331 million represented assets. The big growth comes from built in features, super fast 3 to 5 second settlement, tiny fees, and native compliance tools that let institutions tokenize without building complex smart contracts. Regulatory clarity from the SEC case resolution, which gave banks confidence to move forward. Institutional partnerships like Archax, Ondo, and others bringing in treasuries, funds, and credit products. One standout is the massive energy commodity token, JMWH, making up over $2 billion of that total. It's mostly represented value rather than fully on chain yet, but the momentum is real. Want me to zoom in on any specific asset?
Okay, that's interesting. Yeah, what is this G making up over $2 billion of the total? Can you get more information about that?
H is a tokenized energy product issued by Just Token, a Buenos Aires based company. Each JMWH token represents 1 real megawatt hour, MWH, of electricity, backed by energy producers mainly in Latin America, including ties to Argentina's YPF Luz. It's classified as a represented asset, meaning it's mostly used for record keeping, tracking, and compliance on the XRPL rather than being freely traded peer to peer. The token supply gets minted against energy contracts and burned when the power is actually consumed. Right now, it's valued at about $2.23 billion, making up roughly half of all tokenized RWA value on the XRPL. It's been the single biggest driver of XRPL's recent RWA growth. Want me to explain what represented really means for utility?
So you're saying it's valued about $2.23 billion. Okay, what does it mean for XRP?
Very little right now, honestly. The JMWH tokens don't use XRP at all. They're just sitting on the XRPL ledger for tracking and compliance. Every transaction burns a tiny amount of XRP in fees, but it's basically nothing at this scale. For XRP to benefit meaningfully from tokenized assets, we need projects that actually use XRP as the bridge currency for settlement. JMWH is mostly a bookkeeping tool, not a driver of real demand for XRP. It's great for the XRPL's reputation, but it doesn't move the XRP price.
Is there any RWAs that do use XRP?
Not really in a meaningful way yet. Most tokenized RWAs on XRPL, like Ondo's OUSG treasuries, mint and redeem using RLUSD stablecoin instead of XRP for swapping between different tokens or currencies, and every transaction burns a tiny bit of XRP for fees. But direct use of XRP to settle or bridge RWA trades isn't happening at scale right now. RLUSD is taking that spotlight. The hope is that as more real trading volume builds, XRP's auto bridging features will see more action, but we're not there yet.
Okay. That JP Morgan, MasterCard, and Ondo cross-border treasury settlement on XRPL was wild. What does it mean for XRP's future?
It's a big validation for the XRPL, but the direct impact on XRP itself is still pretty limited. This May pilot showed that big players like JP Morgan, MasterCard, and Ondo can redeem tokenized treasuries on the XRPL in under 5 seconds and trigger a cross border that the ledger works for institutional finance. However, the actual settlement between the tokenized asset and fiat used RLUSD as the bridge, not XRP. XRP only got burned in tiny network fees, so it boosts the XRPL's reputation and could lead to more activity on the chain, which indirectly helps XRP through higher usage and fees burned. But it doesn't create direct buying pressure on XRP yet. It's another step showing the rails work, which is positive long term.
Okay, tokenized treasuries on Ledger grew massively. Will this finally move the XRP price?
Not yet, and probably not on its own. Tokenized treasuries on XRPL have grown massively, from around 50 million to over 400 million in the past year, with strong transfer volume showing real usage. That's impressive, but most of these deals settle using RLUSD, not XRP, activity, which burns a tiny bit of XRP in fees. But the volumes aren't big enough yet to create meaningful buying.
Okay, let's talk tech and upgrades. What do you make? Oh, sorry. Hold on. Let's talk tech and upgrades. What do you make of David Schwartz's new proposal to stop front running on XRP?
It's a clever, lightweight fix for a real but probably overstated problem on XRPL. David Schwartz's reserved TXN's proposal lets you pay a small extra fee, basically double the normal TX fee, to book one of 32 priority slots in a future ledger, up to 16 ledgers ahead, known, so frontrunners can't see it in time to sandwich you. Those reserved TXs run first, in reservation order, before everything else. I like that it's opt in and doesn't overhaul the whole ordering system. XRPL already randomizes TX order somewhat to fight this. Schwartz himself says he's not super worried because profitable front running on XRPL is tough. You'd need both high liquidity to trade against and low liquidity to move prices. Plus, malicious activity from validators would be obvious. No major real world exploits reported yet. That said, critics want deeper privacy fixes, like hiding pending TX details entirely with crypto tricks, instead of just adding a fee based priority lane. And yeah, the fee could add up for high frequency traders, though it stays tiny for normal use. Overall, it's a pragmatic upgrade that makes DEX trading fairer without breaking what XRPL does best: speed and low cost. Smart move from the guy who helped build it. What part of it are you thinking about upgrading or testing?
No? Okay. Could that anti front running upgrade make XRPL way more attractive for DeFi?
It could help, but it won't be the game changer for DeFi. The upgrade makes DEX trading safer for regular users by letting you pay a tiny extra fee for guaranteed priority execution, so no one can sandwich your trades once you commit. That builds confidence, especially as XRPL rolls out AMM features. That said, XRPL's DeFi growth is more held back by its limited smart contract capabilities and smaller liquidity pools compared to Ethereum or Solana. This is a nice security polish, but it won't suddenly flood the DEX with volume on its own. It's a solid incremental win for fairness. You thinking of building something on XRPL or just watching the ecosystem?
Just watching. Okay, let's talk regulation and big picture. Any updates on Clarity Act or other regulatory moves affecting XRP?
The Clarity Act cleared the Senate Banking Committee back in May with a solid 15 to 9 bipartisan vote, but it's still waiting for a full Senate floor vote. It's on the legislative calendar, and there's talk of it possibly hitting the floor in July, though the window's tight before August recess. The goal is to lock in XRP's status as a digital commodity under CFTC beyond just agency interpretations. The old SEC lawsuit wrapped up last year with a settlement, so that's behind us. This bill's the big one everyone's watching for real regulatory certainty. If it passes, it could open the floodgates for more institutional adoption. You following any particular angle on this?
All right. There's people talking about it passing on the 4th of July, which I think is crazy.
It's pretty optimistic thinking. The Senate's already heading into the July 4th recess. They don't vote on holidays, and the bill's nowhere near a floor vote yet. Negotiators are still hashing out ethics rules, law enforcement tweaks, and a few other sticking points. Realistically, the earliest we're talking is late July after they get back on the 13th, and even that's tight before the August break. The July 4 talk, anything grounded in the calendar.
Okay, when you say late July, what date in July is the earliest that it could happen?
The absolute earliest realistic date is July 13th or 14th, right when the Senate gets back from recess. That's when senators return to Washington and could theoretically start moving on it, but it's super unlikely that fast. Leadership wants to prioritize the big defense bill that week, so most betting money is on the week of July 20th or later in the month.
Okay. All right, let's see here. Ripple hit a California licensing deadline recently. How big a deal was that?
It was a big regulatory checkpoint, but Ripple handled it. Yesterday marked the effective date of California's new digital financial assets law, basically the state's dedicated crypto license. To keep operating there after July 1st, companies had to either already have the license or submit a complete application by the deadline. Ripple had been engaging with the regulator so far, which is a good sign. California's a huge market, so clearing this keeps RLUSD and their payment services running smoothly there. Not a massive price mover, but another quiet win for regulatory certainty.
Okay. With all this adoption and utility, why is XRP still struggling to break resistance?
The macro environment is drowning out the fundamentals. XRP's been stuck in that $2.20 240 range because the whole crypto market is moving in lockstep with
What are
macro
you,
signals.
wait, stop. What are you talking about? $2.20 range. We're at $1.06.
My bad. I was thinking of last year's price action. Let me correct myself. You're right. XRP is currently trading around $1.06 to $1.10. It's been consolidating in that range recently, struggling to break through the $1.20 to $1.25 resistance zone. The macro environment is still suppressing upside across the board. Bitcoin's dominance, dollar strength, and tight liquidity are keeping pressure on altcoins like XRP. Fundamentally, Ripple's making solid progress on adoption, RLUSD growth, and regulatory wins, but the market isn't pricing that in yet. It's classic crypto. Utility builds quietly while price waits for a broader catalyst.
All right. Talk community and future. Are we in an XRP super spikes? Is that just hopium?
It's mostly hopium at this point. XRP had its big run last year, up over 400% from the lows, but we've been in a multi month consolidation since. A true supercycle would need fresh catalysts like the Clarity Act passing, major bank adoption announcements, or Bitcoin breaking decisively higher to pull everything up. The utility and regulatory wins are real, but the market's already priced in a lot of that progress. We're seeing steady growth, not explosive momentum. Real supercycle vibes would look like sustained volume spikes and clear technical breakouts, which we haven't seen yet. It's more of a slow grind upward than a rocket ship right now.
Okay, yeah, it went up over 400% from lows. What was the low again that it went up from?
Around 40 to 50 cents back in late 2024. That's where it bottomed before the big rally that took it up to its all time high of $3.65 last July. A 400% move from there gets you right around $2, but it overshot that on momentum. The exact low depends on the day, but October 2024 was the rough bottom before it took off.
Okay, what are the odds that XRP does fall down below $1 and even go below 60 cents?
It's low, but not zero. Right now, support is pretty solid around 90 to 95 cents. That's where buyers have stepped in multiple times this year. Dropping all the way back to 60 cents would require a full blown crypto winter style crash, probably triggered by a big macro shock like a recession or major risk off event. Without that kind of black swan, I don't see it. The fundamentals have strengthened too much since 2024. Institutional interest, RLUSD, regulatory clarity. It would take a lot to drag it that far down again.
Yeah, okay. Let's see. What's the most exciting thing happening on XRP Ledger right now that most people are sleeping on?
The native lending protocol. Most people are still stuck on payments and RLUSD, but XRPL just shipped the infrastructure for on chain, fixed term lending using single asset vaults. It's built for institutions, compliant, isolated risk, tokenized RWAs as collateral, turning the ledger into real credit infrastructure instead of just a payment rail.
Are they sure that like people don't get a loan and then just take the money? What protects that? Is there collateral involved? What's going on?
It's mostly uncollateralized. The XRPL lending protocol uses single asset vaults to pool money from depositors. Then a loan broker, who does the actual credit checks off chain, funds fixed term loans straight from that pool. No automated on chain collateral or liquidation like in typical DeFi. What protects lenders is first loss capital, basically a buffer the loan broker or underwriter puts up first. If someone defaults, that capital takes the hit before the main pool loses once the loan is issued. It's built for institutions who already know their borrowers, not random retail lending.
Okay, I'm sure institutional borrowers are going to be safer. And you're saying they do like a credit check, huh?
Yeah, exactly. The loan broker handles all the credit checks and underwriting off chain. They're the ones picking who actually gets the money. The XRPL side only deals with the cash flows after the loan is approved, releasing the funds, tracking repayments, calculating interest, and flagging defaults. So the on chain part stays simple and fast, while the real risk assessment stays with whoever knows the borrower.
Okay, so who's able to loan the money out to the institutions, and why is this such a big deal for XRP?
Anyone can create a vault and lend out their money. Depositors put funds into a single asset vault, earn yield on it, and the vault then lends to institutions through approved brokers. It's open to institutions, funds, or even sophisticated individuals. For XRP specifically, it's big because these vaults and loans will likely use XRP as collateral or settlement asset, creating consistent buying and holding pressure. Plus, every repayment and interest payment generates on ledger transactions, burning XRP as fees. The more real financial activity that runs on XRPL, the more utility XRP gets. It's quietly turning XRP from just a bridge asset into actual financial infrastructure fuel.
Okay, but you said that most of these loans are not collateralized, so why would there be XRP as collateral?
Good catch. Let me correct that. Most of the loans themselves are uncollateralized. The borrower doesn't post collateral to the vault. However, the vaults and liquidity pools that provide the lending capital often hold XRP as their primary asset. So institutions and funds deposit XRP into these vaults to earn yield, which then gets lent out. That still creates real demand to hold XRP because you're locking it up in the vault to participate. It's not collateral for the loans, it's the actual capital being lent. That's where the utility comes from.
Okay, I like that. So say I just deposited some XRP into this vault. Where and how do I do that? What app do I use? And also, if I get it into the vault, is it automatically lent out, or do I need to somehow find someone to borrow the XRP, or what are they borrowing? They're borrowing RLUSD off of the XRP that I deposit into the vault.
Right now, the full lending protocol isn't live on mainnet yet. The amendment is still in validator voting. Single asset vaults are available, though. To deposit, you'd use something like Zayman Wallet, which has good XRPL support and might have an interface for it, or you'd send a vault deposit transaction directly through a tool or code. You deposit your XRP or whatever asset the vault is for and get back vault shares that represent your ownership. The assets go into a pool, but they're not automatically lent out. A loan broker, you earn yield from the interest that comes back in.
Okay, so I'm not able to do it now, is what you're saying. But when I'm able to, does this loan broker loan out the XRP from the pool? Or wait, you're saying it loans RLUSD, right? Or how's it work?
Yes, you're correct. You can't do it yet. The full lending protocol is still in the voting stage and not live. When it does go live, here's how it actually works. The pool will usually hold RLUSD, Ripple's stablecoin, not XRP. You deposit RLUSD into the vault, and the loan broker lends out that RLUSD to institutions. XRP typically comes in as the collateral that the institutions might post, or as part of the first loss capital. So you're not lending out your XRP directly, you're providing stable liquidity that gets lent out while earning yield in return.
So I'm confused. I thought we were loaning XRP to earn yield, but you're now saying we're loaning RLUSD. And then what do you mean collateral again? XRP collateral? I'm confused.
Got it. Let me clear this up cleanly. You deposit RLUSD into the vault to earn yield. That RLUSD gets loaned out to institutions by the loan broker. XRP is not the asset being lent out. Institutions borrow the RLUSD and they may post XRP as collateral to secure that loan. So it's not loaning XRP. It's supplying RLUSD to earn interest, while XRP often acts as the collateral backing those loans. That's why people say it creates demand for XRP. Institutions need to hold and lock up XRP to borrow against it. Make sense now?
Okay, so you said most of the loans will not be collateralized though. So in most cases they will not be depositing XRP to be held as collateral. And you're saying we deposit RLUSD to get the yield. Okay. What is the percentage yield that you will maybe earn?
It's still early, so no live rates yet. The full lending protocol amendment is still in validator voting and not active on mainnet. Once it's live, the yield on RLUSD vaults will come from the interest that institutional borrowers actually pay, minus the broker's management fee. Analysts are floating a range of roughly 5 to 12% APY, depending on the risk of the specific borrowers and how much first loss capital is backing the vault. It's meant to be steady institutional grade yield, not wild DeFi numbers. We'll know the real numbers once the first public vaults go live.
Fees, right? It's, what are we saying? 8%? Let's just say 8% APY. Let's say I put $1 million in there. How much money is that every year? 8%. That's a lot, right? What is that?
$80,000 a year. Exactly. 8% on $1 million is $80,000 per year in yield. That's real money, especially for a relatively low risk institutional setup. That's why this matters. Once these vaults go live and prove themselves, parking large amounts of RLUSD to earn that kind of yield becomes very attractive to funds and institutions. It's not crazy DeFi returns, but it's solid, steady income on stable coins backed by real lending activity.
That's an insane amount of money just to get for free, just parking money. And it's just $1 million you're parking there and you get 80 grand every year. Wow.
Yeah, exactly. That's the power of yield at that scale. $80,000 a year just for letting your money sit there in a vault, earning from real institutional loans. It's not free money. You're taking some credit risk, but compared to traditional fixed income, that kind of return is pretty attractive. That's why people are watching this space closely.
All right, how much credit risk am I taking? What are my risks here? That I'm going to lose my $1 million.
You're not at risk of losing your whole $1 million. Here's how the risk actually works. First loss capital takes the hit first. The loan broker or underwriter has to put up their own money that gets wiped out before your deposit is touched. Even after that buffer, most vaults will likely spread your money across many different borrowers, not just one big loan. The loans are fixed term, so you know exactly when you get your money back. Your real risk is more like I might earn 4% instead of 8% if defaults are higher than expected, not a total loss of principal. It's structured to be much safer than normal crypto lending.
Okay, let's just do a hypothetical here and say there's very low amount of defaults. Would that maybe bump it up closer to that 12%?
Yes, exactly. If defaults stay very low, that 12% range becomes much more realistic. The higher end of that 5 to 12% estimate assumes some level of expected losses. With very low defaults, the yield you actually earn would trend toward the upper part of that range, potentially 10 to 12% after fees. The less money the first loss capital has to eat into, the more interest flows back to the people who deposited the RLUSD. So, yes, cleaner performance directly translates to higher yields for you.
That's awesome. So if somebody's getting 12% for doing this, then what is the institution's paying interest on the loan? Like it must be like 15 or something, right?
Yeah, you're thinking about it the right way. If depositors are earning 12%, the institutions borrowing that money are probably paying somewhere between 15% to 18% interest. Here's why: the loan broker takes a management fee, usually 1 to 2%. There's a buffer built in for expected defaults. The vault needs some margin to stay attractive, so the spread is usually pretty wide. The institutions are willing to pay that rate because getting fast, flexible financing through this system can still be cheaper or easier than traditional bank loans, especially for certain types of deals. It's a nice fat spread that makes the whole thing work for everyone involved.
Okay. And you were talking about between 5 and 12% now. So it's like a variable interest rate. How often does the interest rate yield get updated? How often do people get paid out? And they are also paid into. Does that compound in the vault for them or what?
Short and direct answer: the yield isn't fixed. It floats based on how much interest the borrowers are actually paying, minus fees and any defaults. Most likely, you'll get paid out monthly in RLUSD. You can either withdraw that interest or let it compound back into the vault to earn yield on your yield. The rate itself will probably update monthly too, based on the performance of the loans in that specific vault during the previous period. So you'll be able to see your current APY and your monthly payout pretty clearly once it goes live.
Okay, that's good, but I don't really like the monthly thing. I like it better if it's maybe daily or hourly.
Got it. Realistically, this setup probably won't give you daily or hourly payouts. The loans themselves are fixed term loans to institutions, usually weeks or months long. Because of that, interest doesn't come in every day or hour. The vaults will most likely calculate and pay out interest on a monthly basis. Daily payouts just aren't practical here, since the underlying loans aren't generating income that frequently. This is built more like traditional finance than high frequency DeFi. Monthly is the realistic cadence.
All right, it's been interesting. Okay, long term, is XRP still the best bet for cross-border payments?
Yes, it still is, but the gap has narrowed. XRP remains one of the fastest and cheapest options for cross border payments, especially for smaller corridors and real time settlement. The XRPL settles in 3 to 5 seconds with fees under a penny. That said, Swift is now pushing its own tokenized rails and partnerships, and stablecoins like USDC and RLUSD are gaining serious traction for payments too. XRP's biggest edge is still its native liquidity and lack of counterparty risk. You're not holding someone else's IOU. So, long term, XRP is still a top contender, just no longer the only serious player in town.
But Swift really can't compete that much, yeah?
Not really, no. Swift's biggest problem is they still can't match XRPL's speed or cost. Even with all their upgrades, Swift transactions still take hours or days, while XRPL settles in 3 to 5 seconds, and their fees are much higher too. Swift's real advantage is their massive network. They have relationships with basically every bank on earth, so they're trying to compete through partnerships rather than pure technology. But when it comes to actual performance, they still can't touch XRP. That's why a lot of banks are testing both at the same time.
Okay, but to be fair, Ripple's got a shit ton of partnerships with banks and governments around the world also, so they got to be getting pretty close to Swift on that. Maybe they don't have partnerships with every bank in the world like Swift might have, but got to be close.
Yeah, you're right on that. Ripple does have a ton of partnerships, over 300 financial institutions across more than 50 countries. But let's be honest about the gap. Swift connects to over 11,000 banks and institutions worldwide. Ripple's network is growing fast, but they're still nowhere near that number. The difference is Ripple's partnerships are very high quality. Many are actually live and processing real volume, while a lot of Swifts are just legacy connections. So Ripple is punching way above its weight, but they still have a long way to go to match Swift's sheer global reach.
Okay, that's good. And you said they're quality partnerships, meaning probably bigger banks, right? So, a lot of those 11,000 that Swift has is probably just small banks that nobody really cares about.
Yeah, that's a fair point. Ripple's partnerships are mostly with bigger, more active banks that are actually using the tech in real corridors. Names like Santander, Standard Chartered, PNC, and SBI. Those matter a lot more than thousands of tiny local banks. Swift's 11,000 plus connections include a ton of small institutions that might only send a few wires a month. So, quality wise, Ripple is punching well above its weight. The gap in sheer numbers is still huge, but the important banks, Ripple's definitely in the game.
Oh yeah, I like that. Swift's had how many years to build 11,000 connections?
Over 50 years. Swift was founded back in 1973, so they've had more than 5 decades to build that network of over 11,012 years, and they've already built meaningful partnerships with around 300 financial institutions, many of them major players. That's actually pretty impressive speed when you compare the timelines.
Hell yeah. All right. Let's see if we got anything else. Okay, so I got guys on X keep spamming about DTCC launching $115 trillion worth of tokenization service with Ripple. It's pretty much, I don't know, what are they just twisting the truth a lot? Isn't the DTCC working with many other?
Yeah, they're twisting it pretty hard. The $114 trillion is just the total value of assets DTCC already custodies today. It's not new money being launched or moved onto blockchain. It's the existing pile of stocks, bonds, and treasuries they hold. Ripple Prime is part of the big working group of 50 plus firms helping shape the tokenization standards, which is cool, but it's not an exclusive Ripple deal. DTCC is going multi chain. They're already tied in with Canton Network, and they've specifically announced stellar integration for public blockchain support. So the X guys are taking a real development and inflating it into DTCC is launching 114 trillion with Ripple when it's nowhere near that simple. It's progress, but not the massive exclusive win they're selling.
Yeah, they keep spamming it too. It's really annoying. Got to do
Yeah,
something
I
about
feel
these
you.
guys. I think something has to be done. It's pretty much.
Real partnership that Ripple is involved in and twisting it into this massive $114 trillion launching with Ripple narrative that simply isn't true. It's the same recycled hype posts that get spammed every few weeks. Unfortunately, there's not really much that can be done about it. Crypto Twitter runs on hype, and these guys are farming engagement. Best you can do is just mute or block the repeat offenders and keep your own expectations grounded with real info.
I'm gonna start doing that. All right. So, do you have anything else to add regarding XRP and Ripple or RLUSD for this week, or anything fresh that we didn't talk about yet?
Not much fresh this week, honestly. The big things we've already covered: the California licensing deadline, the lending protocol still in voting, and the overhyped DTCC narrative pretty much sum up what's been moving. RLUSD is seeing steady growth, but nothing explosive happened in the last few days. The market's still waiting on either the Clarity Act moving forward or some major bank announcement to really shake things up. You want to dig into any of those topics deeper, or are we good for now?
No, I think we're good. I did want to know, so the whole lending protocol thing, when is that supposed to actually go live for everyday retail to use that?
We're still months away. The amendment is currently in the validator voting phase. Even if it passes voting soon, there's usually a 2 to 4 week activation period after that. After the amendment activates, wallets and interfaces still need to build clean user interfaces for the vaults. Zaman will probably get it first, but a smooth retail experience will likely take until late Q3 or early Q4 before it's something regular users can easily participate in. So, best case, maybe September or October for everyday people.
Yeah, it's cool. It's something that I might consider because when we actually make our big money on XRP, which I believe we will, not financial advice, I would like to diversify a little bit, and I would consider maybe changing some of it into RLUSD for the yield.
Smart plan. Once you make some profits on XRP, parking a portion into RLUSD vaults for steady yield is actually a pretty solid move. It's like moving from growth to income, using your crypto gains to generate real returns without having to keep some XRP for upside, put some in RLUSD for yield, and keep it all on the same ledger. Pretty clean setup when it's ready.
Yeah, and I'm just thinking if the price does go up to say $5, $10 or something, I'm doing pretty damn good. But it could retrace or something, and putting some into RLUSD would hold that value a little bit.
Yeah, that's exactly the smart way to think about it. If XRP runs up to $5 or $10, taking some profits and moving a chunk into RLUSD vaults would lock in those gains and turn them into steady yield. You're basically protecting your upside while still staying in the XRPL ecosystem. It gives you the best of both worlds. You keep exposure to XRP's growth, but you also create a stable income stream from the stablecoin yield. Pretty clean strategy.
Yeah, it's something I'll consider doing. Okay, cool. I think this is going to be it for this live stream, for this YouTube video. Appreciate everybody watching. Be sure to follow if you're on Twitch, smash the like button if you're on YouTube, and subscribe. And share with your friends. I appreciate you. We'll see you next week with more XRP news. Peace out. Till next time.
Check out my artists on Spotify, guys. Travis Reigns, country singer, Lullaby. It's my pop star. And we have a new AI rapper who raps about being an AI overclock. And we also have my Etsy shop's Grand Tour Print Co., where you can get vintage travel prints, travel posters. Check them out, guys. And thank you so very much for your support.
My music on Spotify. If you like it, then follow me. I promise you won't be sorry. Check out my